The busiest month for US IPOs for the New York Stock Exchange in recent history. This week alone, companies raised $10.4 billion across all exchanges. Globally, IPO announcements topping $80 billion. Joining us now with more to talk about this is John Tuttle from the NYSE. He's the group vice chairman. He's the chief commercial officer as well. We're also joined by Bloomberg's Sonali Basak. John, thanks for your time today. Look, we really appreciate it. It's been a massive week. It's been a massive month. Snowflake coming to market and generating a huge pop. It all feels very euphoric. What message should investors be taking away from what's going on?
Well, look, it was an exciting week, and it continues to be an exciting week at Snowflake. It's Unity this morning with the price discovery process taking place right behind me. But what I think we're seeing is a strong appetite for high-quality tech companies from investors. The IPO market has been open. We thought 2020 was going to be a quieter year, but the window opened up this spring, and many companies that had been lining up to come out to the markets have decided to do so, and to a very warm welcome from investors, both retail and institutional investors.
John, when you look at the market you still have Bill Ackman's SPAC as the #1 IPO in the U.S. this year. And even the other companies that are going public that are the biggest are still outside of the U.S. How much do you need the SPACs and the direct listings and the Snowflake pop to keep excitement about the U.S. IPO market alive?
Well, there's always going to be excitement about the U.S. IPO market and the U.S. markets more broadly. They are the deepest pool of capital. They have the broadest investor base of anywhere in the world, and that's why they're the envy of the world. And so what we're focused on at the New York Stock Exchange is not only welcoming companies, great companies from across the country and around the world to conduct their IPO, but the transactions that's best suited to meet their objectives. So whether that's a SPAC, whether it's a direct listing, or what we've been working on with the direct listing and capital raise, we want to create more options tailored to the best interest of the most companies around the world.
And to that point, though, a little pushback. We have a graphic up right now that shows the 3 largest IPOs, all IPO'd in China this year. The SPAC from Bill Ackman is the 4th, and that was here in the U.S. I mean, is it really the highlight of the world? I mean, it's kind of China right now. That's where it's at.
Well, look, companies go public in different locations for different reasons. But if you look at what we have here at the New York Stock Exchange, a significant percentage of the companies listing here are from outside the United States. If you look at our over 2,300 listed companies, over 525 of them are from outside the United States, from over 46 different countries. So it remains the envy of the world, the U.S. capital markets.
So you have Palantir next week. This is a complicated deal. It's another direct listing. You at NYSE are working very hard to make direct listing something you can raise money in as well. How complicated is next week going to be? What's your biggest fear in how the day works out?
What we love about the markets and the New York Stock Exchange's market model in particular is that we can flawlessly execute large, complex transactions. It's what's allowed us to create the direct listing. It's allowed us to work on the direct listing, what we're saying 2.0, that direct listing plus capital raise. So we're laser focused on flawless execution, combining best-in-class technology with human judgment and accountability and transparency and communication, and that helps make sure large, complex transactions are executed well.
Out of interest, John, and this is the kind of story we're focusing so much on today, if there was to be a TikTok IPO, would the NYSE want it?
We'll welcome companies from around the world. If they meet the highest bar, our listing standards here, and of course they meet the Securities and Exchange Commission, we'll welcome them to the greatest community of companies on earth.
So do you have to, how do you look at something like that? Because if there's going to be a lot of competition, brought up China before, I'm assuming that if TikTok lists here in the U.S., there's going to be a lot of competition to get it as well. What do you have to normally offer to get better listings, especially as China heats up?
Yeah, look, global companies select their markets based on what's best for them. So if you're a company like TikTok and considering where to list, you want to look at where some of your comps are listed, so your global comparables. And if you look at the world's leading technology companies, they're listed here in the United States. You want to look at the valuation and see how they're valued in that marketplace. You want to look at research and analyst coverage. And you also want to look at the investor base. And here in the United States, as I mentioned earlier, we have the broadest investor base and also the deepest pool of capital. So if you're looking to not only raise capital, and if it's a global company, the size of TikTok, you want depth in that marketplace. And so when they conduct their analysis, I'm confident that they'll conclude that the U.S. marketplace is the best place for them.
I want to bring us back to Palantir for a second, just because it will be another huge listing next week, and the direct listing model is so different. What is significant about next week?
So we have a number of direct listings coming to market, and we think it's exciting because it's a new pathway that we helped pioneer a few years ago that is really tailored to companies that want all the benefits of being a publicly traded company, but don't necessarily need to raise capital at the time of their listing. And so we've created a process here, working closely with the SEC to allow that to happen. And so that's what you're going to see take place not only with Palantir, but with other companies in the near future.
So with Palantir, too, they're keeping so much of the voting rights among the founders, yet they're getting into public markets. When it comes to that, we've seen a different reaction, for example, with WeWork that never had come to market. How much investor interest do you expect to come into a model where the owners still keep so much control? Do the public markets allow for that anymore?
Well, that's the beauty of the markets. It allows investors the opportunity to allocate their capital as they see fit. They're going to do their research. They're going to look at the fundamentals of the company. They're going to look at the governance structure of a company, and they're going to make the investment decision they think is in their best interest. So as long as those items are transparent and disclosed, investors can make the right decisions.
John, I want to ask you about New Jersey for a second here. We had talked to Tal Cohen yesterday over at NASDAQ. They're moving more operations to test in Chicago. Are you planning to move more operations? How heated is that fight getting over financial transactions taxes that the state is holding over the exchanges?
Yeah, look, I understand states and other jurisdictions from time to time are under stress. We understand that. And the idea of a financial transaction tax on the surface sounds like a great way to raise revenue. It's not. In fact, it's going to do more harm than good, not only to the state's tax base, but to the markets and the hundreds of millions, if not billions of people who are in the markets and saving for their retirement, for their children's education. And the thought of having a financial transaction tax is not good. And so we have the ability, as do other exchanges, to make sure that we live up to our responsibility to provide a high quality marketplace for investors across the country and around the world. And so if we need to move our marketplace, we will.
John, one of the big questions that investors are trying to ask themselves at the moment is when are they going to pivot away from investing in tech stocks? Let's frame that with an NYSE question. How much demand is there for non-tech, non-SPAC IPOs right now?
It's a really good question. And in fact, there's a lot of demand right now between now and the election, and then in December and going into the end of the first quarter. We have a strong pipeline of companies, and it's not just tech, it's not just healthcare, and it's not just SPACs. It's a broader group of sectors, and from what's interesting, a broad group of geographies. So there's a number of companies from China that are looking to come in the United States, to list in the United States, companies from Europe, from South America. So the pipeline is strong.
And just to pick up on that, when you're dealing with companies, what is the number one reason why they still want to IPO in the uncertainty of COVID? I mean, do they have different qualifications? Do you hear different things from them depending on kind of what sectors that they're in?
Now, this is a really good question, Sonali, and something we realized during the first part of this crisis is for too much and for too long, people had talked about the benefits of being a private company. Well, during the crisis, we saw a lot of the benefits of being a public company, and those benefits include being able to access capital at market prices. So being able to tap the equities market, being able to come to the debt market to raise capital that you can use to sustain and grow your business over uncertain periods at market rates. So that access to liquidity, either for defensive or offensive purposes, is incredibly important, and a lot of companies have realized it.
John, there's still a lot of people who are not invested in the stock market. So how do you get more retail interest there?
We've certainly seen an uptick in retail interest. What we're focused on is providing a fair and orderly marketplace where investors have the opportunity to allocate their capital as they see fit. So whether it's in companies that have been listed for a while or companies like Unity, who is listing today, we want to make sure we provide a marketplace and provide those opportunities to whether they be institutional investors or retail investors. And you've seen an increased focus by retail investors in the market. My hope is that they're focused on long-term value creation rather than short-term speculation. But the fact that there's an uptick in the focus on the market by retail investors, we view as a good thing.